we will be making forward-looking statements. This is on our website, so I ask you to take a look at that, please. And just for some historical context, and Jay alluded to it, is Eagle Mountain project in Guyana has seen significant interest for the last sort of several years, and this was driven by the strong track record of the team, the appeal of the scalability of the asset owing to the soft rock saprolite. However, the impediment to a premium valuation was that it was a little bit on the small side. The resource was a touch small. So importantly, this has changed, and it's changed significantly. So what we're looking at now is the second largest undeveloped resource in Guyana. The first largest is Goldex, and it's currently the subject of acquisition. We have a freshly minted resource of 1.7 million ounces contained in the indicated and inferred categories, essentially double the resource what we had previously, and definitely plenty of runway for the resource growth on the property to continue. So as we go through the presentation, there's three key features I want you to consider, and it speaks to what Jay talked about earlier, was the potential for CapEx inflation. And these three features we have will really resonate with the industry, and we expect that to continue to intensify in the years ahead as the industry looks for low CapEx and the industry looks for scalable options. So our resource at Eagle Mountain, it's very shallow. It's from surface down to only 80 meters, with the bulk of it from surface down to only 50 meters. Shallow pit configuration, no overburden, extremely low strip. The second point is the surface mineralization is hosted in soft rock saprolite, no drilling, no blasting, exceptionally low power intensity in the mill. And then lastly, because the deposit is flat-lying and tabular at surface, there's flexibility to schedule the high grade early in the mine life and still keep the strip ratio low. So just quickly on Guyana, British law, English speaking, the only country in South America that is English speaking, which for us has its benefits. The Mining Act has been stable for 35 years. It is a mining country. Historically, mining makes up about 25% of the GDP, gold, bauxite, diamonds. And a key factor for us and for any project we look at would be, is there a pedigree for mining? And in the case of Guyana, indeed there is. It's embedded in the agencies. The agencies have permit and the skill of the workers. Okay, so the skill set is mostly specific to shallow open pits, which is perfect for what we're looking at here. Geologically, Guyana is very similar to West Africa, yet it remains substantially underexplored due to the heavy vegetation on the South American side. Modern geophysics has proven to be very instructive for discovery of large deposits, and this has been true for Eagle Mountain as well, which I'll get into. More recently, and just to note, we are seeing some of the world's largest gold companies setting up geology offices in the country, so that does speak to the potential for the people that don't know that. Where's Eagle Mountain? More specifically, we are 230 kilometers southwest of Georgetown from here. We are road accessible, which is key in Guyana. It helps keeps the exploration costs in check. As well, we are 7 kilometers south of the capital of Region 8 called Madia. It's 3,500 people. Madia exists because of gold mining, mainly artisanal mining. It's got hospitals, schools, mechanic shops. It's got a commercial airport, which we use. So we've got a good access to site either by road or by commercial aircraft. Looking at both the region and at the project level, the gold mineralization is pervasive. So if you look at the figure on the left, it's the regional picture. Our prospecting license is in the green box there. We've got about 5,000 hectares. We've got red dots all around us, and those red dots are essentially gold showings in alluvials and in saprolite. So we've got significant showings almost in every direction around our property. So it speaks to the potential of the Madia area. More specifically on our property, which is the box on the right. Now, this is just the western side of our property. The eastern side of our property is relatively underexplored, but still prospective. So on the western side of our property, we have significant gold showings. The red dots are anything in auger hole, bore hole, diamond drill hole over 1 gram per ton, and in the orange was over 0.5 grams per ton. So very pervasive gold mineralization in 2 prominent trends, to the northeast and to the north-south. The current resource here is defined by 2 gold deposits, the Eagle Mountain deposit, which is the bigger one in pink, and Salboro. Both are structurally controlled. Both have been affected by saprolitic weathering. down to anywhere from 10 to 50 meters. The average is about 15. The Eagle Mountain deposit is laterally very extensive. It's 2.5 kilometers long by about 1 kilometer wide. And the other trend that we refer to, we call the Salboro Deposit trend. And it's about 4.5 kilometers long as we see it now, but it extends to the north beyond our property and to the south as well. So the Salboro deposit in pink here is the smaller one. It's about 100,000 ounces of the total 1.7. So digging into the resource, the table here shows the February resource of 1.7 million ounces split between indicated and inferred. And by weathering type, the resource was defined by substantial drilling, about 57,000 meters, mostly shallow given the nature of the deposit, down to less than 140 meters. Importantly, the cutoff date for this resource was November the 6th of last year. So, quite some time ago, and we've had significant discoveries since then. Notably, the ounce hill discovery at the Eagle Mountain deposit. We've had a number of other discoveries as well, called Toucan, Powys, and Ann on the north-south trend. And we are looking to have a follow-up resource update later this year to capture some of that other potential. Looking at the photograph on the bottom right, picture's worth 1,000 words, and this is true in this case as well, as this is an example of the saprolite in the core box, right? Pretty typical approach expected here for the saprolite, friable, do not need to drill and blast. It's free dig with an excavator. We've done 2 significant rounds of metallurgy on the saprolite, and that is detailed in the technical report. Work index is soft, as you'd expect. Sort of a blended, it's about 8, which is very soft. Recoveries are very positive, about 95%. Low sulfide content, low reagent consumptions because of the low sulfide content. And the test work indicates a very coarse grind recovery relationship, which will have scalability benefits, which I'll get into later in the presentation. Just getting into the Eagle Mountain deposit and its favorable geometry. It's a system of low angle thrust faults. You can see here, we've got 3 zones of mineralization. These are 3 sort of shear zones that are tabular and parallel to surface. Zone 1 is at surface. It hosts the bulk of the mineralization and has been the subject of most of the drilling. One of the main points is this, and this is critical in the whole thing, is Zone 1 contains 92% of the gold in the indicated category and 77% of the gold in the inferred category. And Zone 1 is from surface down to only 50 meters. So this is what we like about it obviously from a mining perspective. We would look to mine the saprolite, again, which would be right at surface. Once we mine the saprolite away, essentially we daylight the underlying fresh rock. And the underlying fresh rock would therefore have a low strip ratio as well, right? So this is the phase development strategy we're thinking about. And it speaks to potential to start with a low capex intensity on the saprolite and then eventually scale into the underlying fresh rock, also with a low strip ratio. On the Salboro deposit, again, this is a smaller deposit. It's got slightly different, it's the same mineralizing event, but it's hosted in vertical, subvertical, within the breccias or adjacent to the breccias. And what we've got here is a number of breccias that come and coalesce close to the surface such that we have a much, and enrich the grade. We've got about a 2 gram per ton, quite a small open pit. We're looking at down to about 80 meters. There is potential to push the pit deeper to the extent that we could extend this laterally and lower the strip ratio and then push that pit bottom deeper. So we will look to test for that and test for lateral extensions as we go here. But for now, this resource is only down to 80 meters, but potential, as I said, potential at depth. So this Salboro is more typical of what we see on the north-south trend, is higher grades, more vertical, subvertical. What we'd expect is the Salboro, the Toucan, the Powys to be satellite deposits to the much larger Eagle Mountain deposit. Moving on here, we do have a number of other exploration targets, both on the Eagle Mountain deposit and the Salboro trend. Getting into the highlight hole, which spend most of the time on, Ounce Hill, was a discovery we made in early February. This was exceptionally high grade. We hit a hole that was 34 meters true width from surface, grading 20.38 grams per ton in saprolite. Probably, in the context of the particulars, surface and saprolite and the grade, probably one of the best holes drilled this year so far. So we've got a high grade feature here in the Ounce Hill area at surface, probably represents the starter starter area for the Eagle Mountain deposit, and we need some more follow-up drilling to be done there. So far, it's been defined by about 4 drill holes. Of course, not all 20 grams per ton, but all have a thick package of mineralization and mostly in saprolite in that surface. So nice surprise from the infill program. We will continue to work our way down this deposit and do more perpendicular holes, which is what this one was, to see if we've got any more of these high-grade features which run down the length of the deposit in the same orientation that we had done most of the drilling historically. So Salboro Deposit trend different, as I said, vertical, subvertical. These have higher sulfides and high silicification. They do show up well in geophysics. Geophysics has been instructive for us in the discovery of these. And you can see some high-grade discoveries here that we drilled subsequent to doing the geophysics work. And we will continue to sort of follow up on Toucan Powys and look to get these into the resource update later this year. The whole eastern side of the property is essentially untouched. We spent all of our time on the western side due to access. We are looking to get and improve access on the eastern side, in the coming year or so, and do some work, notably in the northeast. We've got artisanal miners all around us to the northeast, and there's some big operations there. They're beyond the alluvials into the saprolite. I won't touch on the metallurgy again. I talked to that already. Good recoveries and a very coarse grind. We should be closing on a financing here in the immediate term. We announced a deal and upsized it to $11 million plus the overallotment. That did go well. Some high quality institutions came into that, including Van Eck for $5 million. So look forward to closing on that. We also announced a concurrent 10-for-1 consolidation. So at the end of all this, when we close the financing and close the execution on the share consolidation of 10-for-1, we should have an asset quality and a share structure that are aligned equally high quality. Previously, we had a high quality asset, and I would say not a high quality share structure. So that has been addressed. The team, highly skilled professionals covering all the key disciplines. I would note that our executive chairman is Eric Fear, founder and CEO of Silvercrest. He is our QP. He is also still very involved in our project as well, and it's good to have him. And he's just one of these guys that is just focused on these phased development strategies, which is fundamental to what we're doing here. And we think basically this is the right approach. With an industry that is getting congested, the extent you can find a scalable asset will be critical to navigate this industry congestion, which we'll see in the next couple of years when gold projects and base metal projects are all looking to build up at the same time. Valuation, Jay alluded to this. We do have I would call it an unfavorable valuation, but we have the potential to have a much higher valuation, and I would argue a premium multiple, given the quality of this asset from a development point of view and the quality of it from an overall margin point of view. We will be looking to address this, and we think, looking ahead, with the company cashed up, we're going to be closing this financing here in the immediate term. We'll be sufficiently cashed up for 2 years of drilling. We've got 3 rigs on site. Looking to do a minimum of 16,500 meters of drilling this year. We've got a number of untested targets, including on the eastern side where the property hasn't been looked at. We're looking at a PFS study about mid-2022 that will provide better definition on the scalability of the asset and the low CapEx intensity. Got an active M&A backdrop in Guyana. Obviously, indirectly, that should provide some benefits, and we think we've got one of the most developable assets in Guyana, so that will help. Expect some news to unlock this potential on absolute and relative basis.